And that might not be a problem for JGBs and the Japanese yen, but for the dollar it is, because it's the reserve currency of the world. And countries who hold dollar reserves, usually they park it in the treasury market. And if the treasury market is in trouble, that's not a good thing. Monday, June 21st, 2021, Maneco 64, home of alternative economics and contrarian views. So today we're going to look at how the Federal Reserve, according to Zoltan, who's a top analyst at Credit Suisse bank, he used to work for the Fed as well. He says that Powell has launched a $2 trillion heat-seeking missile into the system, that the Fed's decision to raise the reverse repo rate from 0 to 5 basis points could have a disastrous impact on the whole system, to basically drain the liquidity away from the system. And yeah, we're going to quickly talk about that today. Before, though, I like to announce a couple of things. First, I made a video yesterday morning, a short video about an experience I had. I put it on YouTube and it was deleted. I was given a warning. That's the first time I was given a warning. So I downloaded it on Rumble. I do have a Rumble channel. I do post most of my videos there. Lately I hadn't, because I had a problem with my other PC, but I've been able to log into Rumble. So if you want to watch it, go to Rumble. It's already got almost 1,000 views. I'm not going to tell you what it's about because I want to keep my YouTube channel going. And aside from Rumble, if you want to know a little more how I think, go on Twitter. I'm on Twitter. And I also post all my videos on Facebook, on Hive, on Steemit, on BitChute, and DTube. BitChute, I posted this video on BitChute from yesterday, but BitChute is not very reliable. It's still uploading it for some reason. Rumble is reliable. The other thing I like to note is that Wall Street Silver Reddit group is up to 120,000 silverbacks now. And yes, I think we're making a difference. We need to inform the public about sound money, and especially silver. Silver is the money of the public, really. Gold is good as well, of course, but it's more of a wealth preservation, even though silver as well. Silver is more the change that we use day to day, or we used to use, our parents and grandparents. And but it's still very reliable, sound money, and it has been for thousands of years. We need to, of course, keep stacking physical silver outside the system. We need to try to avoid ETFs. Yes, the PSLV is a credible ETF, but the only way you will realize, in my opinion, that gold and silver are money, really, and that they're special, is by buying one or two coins if you can, and holding it and seeing how precious they are, and why people have been using it for thousands of years as a store of value, as a means of exchange, or a unit of account as well. So yeah, and I highly recommend you join Wall Street Silver Reddit group. They also have a YouTube channel. I think they're over 20,000 subscribers. They interview loads of interesting guests too. So just to give you an idea what the repo market is, the easiest way to probably explain it is that it's the pawn shop for Wall Street, for the big international banks, for the hedge funds, for mutual funds, for big corporations. It's where they take their treasury holdings, U.S. treasury holdings, and they lend it overnight, or maybe for a week or a month or 3 months, but it's usually overnight. And why do they do that? Well, to get cash, because they're greedy and they want to borrow on the back of their treasury holdings in order to buy assets to get more returns. It comes down to greed, of course, the repo market. And I've spoken about a lot about the repo market, especially in 2019 with the repo Geddon or repo apocalypse that happened in September of that year. Back then, though, rates went up to like 10%, the overnight repo rate, while the Fed funds rate, overnight rate, was around 2%. So that was a huge problem for the Fed. That was the first repo crisis. And what that meant is that the customers and the pawn shop didn't trust each other. So they raised rates. That meant that there was a problem on Wall Street. There was a problem in the financial system, a lot like during the Lehman crisis. All the banks were at one point in danger of collapsing because they didn't trust each other. So that was the first repo crisis. The Fed had to stop raising rates. They had to stop not tapering, but they were actually unwinding the balance sheet, and they started not QE again. Of course, the crisis last year really gave them an excuse to basically double the balance sheet of the Fed, more than double. Last week, the official data from the Federal Reserve showed that the balance sheet of the Fed is now over $8 trillion, $64 billion. I think it jumped almost $100 billion in a week. As you can see here, it's gone really from bad to worse for the Federal Reserve. So, yeah, that's what the repo market is. Let's say Monaco 64 securities. We have some treasuries and we want some cash. So we go to the repo market. That's basically what it is. And whoever lends you, the cash, it's the reverse of you. So the reverse repo market now is kind of in trouble, according to a guy who worked for the Fed and knows the ins and outs of this pawn shop on Wall Street. And it's not just the American banks, it's all the big international banks are involved. So the guy's name is Zoltan. I think that's his first name. I forgot his last name, but he's known as Zoltan. And he says Powell just launched $2 trillion in heat-seeking missiles. Zoltan explains how the Fed started the next repo crisis. And this one is unusual because it's related to QE, because when the Fed does a lot of QE, it's basically flooding these international banks or financial institutions with a lot of cash because the way they buy treasuries and mortgage-backed securities is by buying it from these people who are involved in the repo market. And these people get cash, but the banks are were so up to here in cash last year with the crisis that they had to change the regulatory rules for their balance sheets and capital requirements, reserve ratios, and things like that for the commercial banks. So the Fed gave them an exemption until, I think it was the end of March this year. It was the statutory leverage ratio, SLR. I've spoken about that before as well. And they didn't renew that exemption. So having too much cash was a bit of a problem. It was hitting their buffers, so to speak. And this is all related to regulations, of course, because the regulators are concerned because of what happened in 2008 and 9. So what the banks have done is they're putting their cash overnight, every day, rolling it over into the Federal Reserve repo facility so that it doesn't show up on their balance sheet. And last week, when the Fed announced they were raising the rate from 0 to 5 basis points, which isn't much for the reverse repo, the amount of cash that flowed into that facility was 50% of the existing. It went from 500 billion to 750 billion. and Zoltan thinks it could go to 2 trillion. I'm not going to go through this article. I've read it. It's confusing. Even me, who worked in the markets for 20 years, and I even worked in the treasury market, cash market. I actually worked with someone that did repos, and I helped him out. It's confusing for the person who's outside the system, but I recommend you read it. Try to kind of understand what's going on, and also go to a playlist that I created last year, or actually back in 2019. It's called Repo Crisis, and there are 14 videos in there that might help you understand a little more what the repo market is all about. But I've jumped here towards the end of the article, and this is what Zoltan says. Bottom line, we're witnessing the dealer of last resort. That's the Federal Reserve. You see, they're the dealer of last resort now in the repo market. The repo market was a market amongst the major banks, financial institutions, brokers, and dealers, not the Federal Reserve. Learning the art of dealing, making unforced errors. If the Fed sterilizes with an overpriced overnight reverse repo facility, it has to be ready to add liquidity via swap lines. Yes, and I know it's complicated, but here's the translation. By paying trillions in reserves, 5 basis points, the Fed just planted the seeds of the next liquidity crisis. Well, what's a liquidity price? Well, it's when you're trying to sell securities, bonds, stocks, anything, and you can't get a price. The dealer won't deal with you. So that's very serious. That's what happens in major crashes. Am I saying we're going to have a crash? No, but the system is so past, being normal. It's such a huge mess that I don't know what's going to happen. And that's why I hold on to physical gold and silver I outside the system, and I try to have the least exposure that I can to being in this really crazy, I would say, fraudulent, irresponsible, highly leveraged, highly indebted system. So, we need to keep an eye on this. It's something that you probably won't hear in the business news. It's something that you won't read in the Daily Telegraph or normal newspapers. But you need to be aware of all the problems that are out there in the financial system. With that, let's quickly look at where the markets are this morning. I'm a little later today. It's quarter to 9 a.m. London. I stayed up late watching a little bit of the U.S. Open. One thing I would say, the guy who won, he 2 weeks ago, the PGA Tour kicked him off a tournament that he was going to win. He had a 6-shot lead with 18 holes to go because he tested positive for you-know-what. So now he comes back 2 weeks later and wins the U.S. Open. It's such a serious thing, isn't it, that you can come back from it and win a U.S. Open with no problem, playing really well. Anyway, let's continue. So spot gold right now is at $17.78, up $14 or 0.8%. High has been $17.80, low $17.64. Silver is up 16 cents at $25.96, up about 2/3%. So underperforming slightly gold. The high's been $26.08 and the low $25.53. The other thing I think that could impact liquidity and the markets is the fact that we're getting Basel III for the EU banks on June 28th and the American banks on July 1st or 2nd, because Basel III is all about regulations, all about bank capital regulations. And with the reverse repo market in trouble, it could really accentuate things. Who knows? We'll have to wait. The Dow future is up 93 points, 0.25%. The NASDAQ 100 futures up 61, just under 0.5%. The S&P 500 futures up 10, 0.25% higher. The currencies, we've got sterling up 0.2% at 138.28. The euro is at 118.80, up about 0.2 as well. The dollar's down about 0.2 versus the yen at 110.03. And the dollar's still very firm, relatively firm versus the yuan at 647.37, up about 0.2. The Aussie dollar is at 74.97, up 0.25%. Aussie dollar's taken a big hit in the last couple of weeks or so, mainly because the commodities market have been hit by the supposed hawkish Federal Reserve. I don't think anyone on the FOMC, Federal Open Market Committee, the 18 members there, probably wouldn't recognize. I don't think they would recognize what a hawk is really. They know what doves are. Anyway, the general commodities, we've got WTI crude touching 72 actually overnight. Right now we're at 71.60, up 0.5%. We've got high-grade copper down 1% at 411.50. What about the bond market? What I noticed last week with this fiasco, this huge mistake the Federal Reserve has made with the reverse repo, is that short-term rates actually spiked all the way up to the 5-year note, which is not great really because Uncle Sam wants to borrow a lot. But then on the longer end of the curve, like the 10-year and the 30-year rates really, especially in the 30-year, dropped massively. There's something really wrong with the markets. I mean, we've seen that in Japan where the BOJ has been buying and buying, JGBs forever. It's basically killed that bond market. There's very few trades going on, very little liquidity. So there you go. If you enjoyed this video, make sure you hit the like button and please share it far and wide, and think about subscribing to my channel. And I wish you all a great start of the week and a great day. Take care. Bye.